All right, here we go. We are back in the portfolio, and as you can see, we have hit four figures. So we are on almost exactly $1,000. So you can see that I've made a second investment. So if you this is your first video of mine that you've seen, what I'm doing is I'm investing spare change into the stock market in the with the goal of trying to build up the largest portfolio I can, just based on that, investing primarily in dividend stocks. So last week I began with some pepper money at $522, lost a little bit, and I've made another investment, so my second stock pick. And you can see that I've come in at 1024 and we've had a steady decline. So I'm losing money left and right here. What is going on? I don't know what these companies are doing, but they're throwing my money away. So what was the second company that I've invested in? So here in Australia, we have four big banks, and these are known as the big four Australian banks. And for my pretty much my entire life, these banks have been a constant in the Australian economy. We have the Commonwealth Bank, Westpac, ANZ, and NAB. ANZ is Australian New Zealand Bank, NAB is National Australia Bank. These are four of the biggest companies in Australia. They've always been around. I don't think that they're going to go anywhere, but obviously there's no guarantees in life, but they're very stable companies. So when I started this portfolio, I always thought that I would be making a pick of one of these banks and having that as a little bit of a cornerstone of the portfolio, on the basis that they are so constant, and these guys are masters of separating people from their cash. So obviously they do a lot of good. They give home loans, and people have their savings with these guys, but they are also very efficient at making sure they are maximizing profits for shareholders. So we have these four banks, and I learnt a new word this week. We have the word quadopoly. So it's like a monopoly, but a monopoly of four. So there are other banks and lenders in Australia, but these guys have pretty much got a very large slice of the market. So we have a quadopoly, which is a market situation characterized by a specific type of oligopoly, where only four firms control a significant portion. So the quadopoly. Now, which one do we pick? So there's four. They're all slightly different, but perhaps more or less the same big banks. Which of the big four ASX bank stocks paid the most passive income? This is what we're all about here. We're after the passive income. I am going to the Motley Fool a fair bit for my information, but I am looking at other places as well. So I'm not just looking at one source. But the Motley Fool did a little bit of analysis a couple of days ago, comparing the passive income of the big four and looking at how much they all paid out. So they concluded that Commonwealth Bank, paying out $4.85 a share, paid out the most. But this talks about also the growth of the company. So you want your company to be, on the grow. CBA shares went down 2.7% over the year. ANZ went up 20.8%, which is pretty massive. NAB went up 7%, not bad, and Westpac up 14%. These banks continually post good numbers in Australia, and keep in mind that international investors can also invest in these banks as well, so it's not exclusive to Australia. So which of these four banks should I go with? So let's have a look at the Commonwealth Bank. So my fundamental analysis at the moment is based on the idea of, this is the Commonwealth Bank of Australia, currently $150 a share. So the CBA is the biggest one, and it's down a little bit at the moment. And you can see over the last year that it's been pretty flat overall. So as I say, my analysis is based on looking at the last year, just to getting a bit of a guide from the chart. Also looking at market cap. It's a massive company in Australia, like $250 billion is pretty huge. And the dividend yield of 3.14%. So I'm not quite sure. Again, I'm a bit confused here because we do have that $4.85 dividends per share, but the dividend yield is 3.14%. So maybe I'm missing something. If you can see what I'm missing here, please let me know, because when I look at National Australia Bank, $41 a share, over the last year, it's had some growth. And when we look at the dividend yield, it's 3.98%. So it looks like it's got a higher dividend yield than the Commonwealth Bank. The ANZ has had some pretty good growth over the last year. You can see that it's had pretty good growth there. Most of the banks have had this profile of pretty flat, and then over the last year they've grown. I don't know what's going on, but all four banks, very quickly go back to Commonwealth, have had this flat and then growth, flat and then a bit of growth. And the ANZ has got dividend yield of 4.42%, which sounds good, but then what I'm looking for is 100% franking credits, 100% franking, which basically rules out the ANZ for me. So unless that dividend yield is really, really high, I'm looking for 100% franking there. So I haven't got that. And what about Westpac? So coming up to Westpac, we've got $38 a share. Same kind of thing. Lots of growth this year, but over the 5 years, similar profile, flat. So you can see that it's almost like birds of a feather flocking together with these guys. They did have that big growth. That's a pretty big day right there, bang. And 3.9% dividend yield, pretty healthy, and the franking of 100%. So I ummed and ahed between Westpac and NAB, but in the end, I was just a little bit more convinced with the dividend yield over here of 3.98%. So $41 a share, and back over here you can see that in my portfolio I've actually added the NAB. So that's going to be a bit of a cornerstone of my portfolio. I can always come back and add some Westpac later on, but of the big four, I can feel, a bit secure that I've got some big four in my back pocket now. So I've got a quantity of 12 shares of the NAB, and I'm getting hammered in the reds here. So I don't know what's going on with these guys, but over the last few days, they're burning my money. So hopefully they can turn it around. I've got 4 figures at the moment, and I'm hoping it doesn't dip back into 3 figures because we want to see it going up. But anyway, that's what's been happening there. I've added to my portfolio. The next thing I need to do is diversify away a little bit from finance, because I've got Pepper Money, which is a lender. The only difference between Pepper Money and a bank is that they don't have accounts. They don't, you can't, have a savings account with Pepper Money, and one of the big 4 banks. So I need to diversify away from finance a little bit. So there it is at the moment. So we've cracked 4 figures, and looking forward to getting my first dividends from these lenders probably in a month or 2. All right, that's it. Hope you enjoyed the video.